Morning, everyone. There's a few stragglers, but we're going to get cracking because we've got a big day today, and we've got some food supplied. I'm sure Corinne, who spoke to you on the phone, has let you know. So actually going to get some food into you very shortly to keep the wolves from the door, and then we've got some lunch and afternoon tea as well throughout the day. So you won't go hungry, which is good. Hopefully you don't get tired in the afternoon, but you won't go hungry. So welcome. We're very happy that you've come to join us here today, and we're going to be talking obviously about the US and how you can either start what you're doing in the US or build on the existing portfolio that you have. What we're trying to show you how to do is how to fast track your progress, because once you understand the benefits of buying in the US and what you can get out of it, you'll want to do it as soon as you can, because the opportunity we have in America is probably only a few years away from really a bigger upswing than where we have it at the moment. So hopefully you'll understand what the opportunity is and can start to move forward. So we've got about 15 to 20 minutes now. We're going to go through a bit of a schedule of what we're going to cover today. There we go. There's a little do. Okay. As a disclaimer, at the moment, all the information you're going to hear today is of general nature. Obviously, once you speak one-on-one with any of us, then we'll start to get into your specific details of your situation. There's lots of things we're going to cover today. You might have spoken to a couple of Americans as you came in and were wandering around. We actually brought out some special guests from America, and we do that a few times a year for our clients to get understanding. A lot of people don't have the time or the inclination to fly over to America and do a lot of research and spend the time over there. So what we're endeavouring to do is bring people over here so they can talk to you and you get a better feeling for what the situation is and how you can take advantage of it. So we're going to cover a lot of information today. Some of it might be a little bit quick, but please ask any questions of all the people up here, and they'll be glad to help you answer your questions. We are going to have a few breaks throughout the day, and that will give you opportunity as well to speak to people one-on-one about what you want to do and how you're going to go about doing it. So we're going to start by first finding out how many people here have actually been to America. Let's have a show of hands. Wow, we've got lots of people in America. That's great. And how many people here have actually been to a seminar or workshop or some nature in the last few years on US property? Okay, about half of you. And how many of you have ventured so far, and I know there's a few clients in the room, who have actually bought properties over there? Okay, quite a few as well. Excellent. Okay. A lot of you haven't bought properties, so a lot of this information is a fair bit of it, and please, if you think it's probably too much content, it's good every time you hear it, you'll learn something new, and it'll build on your knowledge base. And for those of you who've already started buying property, some of this will be great, and it'll just expand on what you already know. So what we're going to have a quick look at is what was the GFC and what the opportunity, what's it created for us as an opportunity. I think that's important to sort of start at the basis of where it all happened, because I get asked all the time, is it too good to be true? Is it really there? Are prices really $50,000, $60,000, $100,000 for these houses? Because when you first start looking at it, you can't believe that you can buy an asset for that sort of money. And once you start looking at it, you'll find out that you're buying assets at half the cost of what it actually takes to build the property, and where basically the land value is nothing. So you're buying the land for nothing at the moment. And as we all know, over time, properties will depreciate and land will appreciate. Certainly that's what's happened in Australia, and it has happened in America. So this goes through a bit of a chronological events of what's actually happened. The term GFC is not really an American term, I've found out. It's more so world media has sort of came up with this global financial crisis. Certainly when you travel around America, as a lot of you have done, you're seeing the crisis firsthand. I don't know how many people talk to the locals over there about what their personal situation's been, but I've certainly talked to lots of people about what's actually happened and try and put myself in their shoes. That a few years ago you bought your family home, you spent $300,000-$400,000 on it, you've got a mortgage, nearly 100% in a lot of cases of the mortgage value, and now the house is worth a quarter of what they paid in a lot of cases, or a half. And that's what the consequence has been, that these people unfortunately haven't been able to keep onto their house, or if they had a long-term view and they wanted to keep paying, they could, but when your mortgage is $300,000 and the house is worth $90,000 or $80,000, it's psychologically it's a pretty big jump to take. And because it was fairly easy to hand back the keys, so to speak, it's created this massive pool of people in America who have to rent because now their credit is not sufficient to get a loan. So it's created this opportunity for some, especially if you're a young graduate in America coming out of university or a tradesman just starting in a new job and you've got a decent wage, the world's your oyster. You can buy a phenomenal house for $80,000, $100,000 where a few years ago you couldn't. So that gives you a bit of an overview. Look, the boom actually happened in America, not at the same time everywhere. And so what you need to understand, in some places in America, it peaked out at 2006. So in those areas which peaked at 2006, and if they are in what we call a high foreclosure state, and what I mean by that is a state which built way too many properties in the boom. So when they had their boom, national builders came into some states like Phoenix, Arizona, Las Vegas, went into California, Atlanta, Florida, lots of these big cities. They built too many properties because they thought it was going to go on forever. It didn't, and now they've left with an excess supply. And some of those cities peaked out in 2006, and that means they've had nearly 6 years to try and soak up some of the stock oversupply. So now they're starting to see in some places it actually ticked up. I know in some parts of Florida it went up by not a great deal, but 3% last year in value, which is a good sign. But you're coming off a very, very low base. So that is something to take into mind. Subprime lending, unfortunately, was a type of lending in America where you didn't have to get a loan based on your pay slips. You basically got a loan if you could hold a pen. Unfortunately, that's how easy the lending was. And that helped fuel the fire that a lot of people who could never afford a house were buying houses. Not only were they buying a house to live in, they're actually buying investment properties. Because if a bank said, yes, just sign here, you've got another house, and the interest repayments for, say, 1% interest rate at that time, even though the real rates were about 5 or 6%, they were paying 1%, because that's the way they designed the mortgages. It started off at, say, 1 or 2%, then in 3 to 5 years' time, it jumped up to about 8 or 9. And surely a normal person would understand, I can't afford it 8 or 9, so maybe I shouldn't buy it. But unfortunately, millions of people in America didn't really understand that or take that on board and bought all these houses, and it helped create the collapse. Just a bit more about this. Obviously, the US banks, so the whole chain sort of got a bit greedy, and they packaged up all these bad loans and sold them off, and then countries like Iceland and other companies bought all these bad loans as investment vehicles, and they've lost a lot of money too, and that's sort of where the phrase GFC sort of hit, because it wasn't just American values dropping, it affected a lot of other countries around the world, pension funds or superannuation funds buying these, what they called A-grade assets, but at the end of the day they weren't, and they found out. It gave people a false sense of confidence. Interest rates dropped to try and lift the economy in the last few years. It hasn't done a lot, but certainly they can't go any lower than where they are from the Fed Reserve level. Banks, and one question I get asked all the time, why aren't our interest rates 0% or 1%? It's just like over here, the Reserve Bank's at 4.5%, and banks are lending out at 7, 7.25 or so. So there is a margin obviously in there as well. One of the issues they had over there was this non-recourse, no money down situation. So what that meant is if you got a home loan, you weren't personally liable to pay it back, which really doesn't make financial sense, and they've gone away from that now. So their lending has gone basically full circle from where there's no responsibility to where there's full responsibility in most cases. You'll hear today that in the finance section that we can start to lend to self-managed super funds in Australia, in America, and under that scenario, the loan actually has to be non-recourse to meet the ATO's guidelines, but the lenders that we're working with there do provide that non-recourse nature. But most of the banks we deal with over there now are full recourse, just like we would expect over here anyway. So if you're getting a loan, you were actually responsible to pay it back, which makes sense to me anyway. As it's got there, home prices shot through the roof in 2005 and 6. Some of the prices were increasing by 50% in a year. And in Miami, a lot of people I've spoken to, they were buying houses in the condos in the morning and selling them in the afternoon for $20,000, $30,000 profit. It was ludicrous. It got way out of control. And still, when you go to Miami now, there's thousands and thousands of empty apartments because they really built too many. What's been happening there in the last 12 months, though, is Brazilians have had a boom in Brazil. Their dollars shot up against the US, and they've had a property boom. And now they're buying up. I think every third sale to a property in Miami is to a Brazilian in the last 12 months. We'll have a look at some stats about who's actually buying US property soon. So one of the issues we've said in 2008, really the banking crisis really hit its pinnacle in America, where they lost so much money. There's over 300 financial institutions in America have now gone belly up. 300. I think it's 315. They've closed their doors. They're not getting the money back on their loans. And once that's really led to the position that it's very, very difficult to get lending in America. I don't want you to walk away today thinking it's press a few numbers in a computer, press a button that says yes or no. It's not that easy. We've spent the last 2 years trying to build up lending arrangements in America so people can get loans and we can leverage and we can move forward faster. And we have, and you'll see that today. But it's not easy. Americans, unfortunately, their system is if you go to one of their big banks like Bank of America, what they do is generally on-sell their loans to Fannie Mae or Freddie Mac. And because of the GFC, Fannie Mae and Freddie Mac won't buy loans written to foreigners. They do have a jumbo loan for a foreigner, but none of our clients are really in that sort of area. So it is very difficult. So we have to deal with smaller banks, and these sort of banks don't on-sell their mortgages, they keep them on their portfolio. And to reduce their risk to foreigners, they have some restrictions in how they lend and what they lend, and a lot of these banks will only give you 1 or 2 loans. And that's one way they limit their risk to foreigners. But we'll get into that as we go around. So that's just a little bit of a summary. One of the unnerving things still in the economy over there is that the fact that 15% of Americans are still living in negative equity. And some of you might not realise that there's been a few articles in the last 6 months in Australia that there's a huge proportion of Australians who are in negative equity. It doesn't get a lot of play out there, but a lot of Australians are actually in a position where their mortgage is actually higher than their value of their house. At the moment, it has happened before in the early 90s where Westpac did call up some loans when that happened. At the moment, we haven't heard of anyone happening to that effect in Australia at the moment, but we don't know. If there's a crisis or a recession or something like that, then there is a potential that the banks may speak to these people about repaying some of their equity. So it's not just an American phenomenon, it has happened here. Hopefully it won't. But look, the US is still feeling their effects, and hopefully in the next few years the banks will start to loosen up their grip, because if the banks don't lend, prices won't move. And because there's such a big pool of foreclosures over there, those people can't get what we used to call a non-conforming loan, or if you've got a bad credit, you can get a bad credit loan. They don't really have that sort of loan in America at the moment. So all these people have got no choice but to rent until lending comes back over there. But the good thing for us is that we can buy a lot of properties in the next few years, and then lending starts to come back again, it will push the prices up. Because when all of you have been to America, a lot of you have, I don't know if you're concentrating on looking at the areas of what construction's going on, but there are very few areas where there's a new house construction going on in the last 5 or 6 years. One of the few areas I've seen is Texas. Some parts of Texas there is construction going on, and that's like a mini economy in itself because it's so large, about 24 million people in Texas, and 80% of those are in a fairly, a geographic location there. So most states I've seen, there's not much construction, there's no new big developments going on, so eventually this stock will be soaked up and the price will rise, which is interesting to see. Everyone probably heard of Warren Buffett, great investor. If you are on Google, like 99% of us are, just type in his name and put property next to it, and you'll start to see what he's been talking about and what he's been doing himself. As we know, he's more of a share market man. He buys and sells companies and builds companies. That's his focus. But he's actually come out and said that if people could start buying residential properties, the only caveat he puts on that is that property management is a critical factor. And one of our property managers today loves that because he's a property manager and he believes that too. So he talks about that a lot. Well, we'll just have a quick listen to what he has to say to give you a bit of a focus on that. Let's have a look.
Equities are still cheap relative to any other asset class.
But they're not.
I would say the single-family homes are cheap now too. Yeah, single-family homes. If I had a way of buying a couple 100,000 single-family homes and had a way of managing, the management is enormous. It's really a problem because they're one by one. They're not like apartment houses. So, but I would load up on them, and I would take mortgages out at very, very low rates. But if anybody is thinking about buying homes, 5 years ago they couldn't buy them fast enough because they thought they were going to go up, and now they don't buy them because they think they're going to go down, and interest rates are far lower. It's a way, in effect, to short the dollar because you can take a 30-year mortgage, and if it turns out your interest rate's too high next week, you refinance lower, and if it turns out it's too low, the other guy's stuck with it for 30 years. So it's a very attractive asset class now.
if you are a young individual investor at home and you have your choice between buying your first home or investing in stocks, where would you tell someone is the better bet?
If I thought I was going to live, if I knew where I was going to want to live the next 5 or 10 years, I would buy a home and I'd finance it with a 30-year mortgage, and it's a terrific deal. And if I was an investor that was a handy type, which I'm not, and I could buy a couple of them at distressed prices and find renters, I think that's and again take a 30-year mortgage. It's a leveraged way of owning a very cheap asset now, and no, I think that's probably as attractive an investment as you can make.
Which it's pretty powerful when probably the world's best investor is saying get into property if you can leverage, and get into property if you can manage it. So it's one thing to take on mind, and I'm sure that's why most of you are here today, because you realise it is a great opportunity. We're just going to hear from one other person about what they think of the market. This person you may recognise, and then we're going to break for some food quickly.
Donald Trump made a fortune investing in real estate, and despite being down in the economy, he's been making investments all over the world lately. As to the question of whether now is a good time to buy a house, Trump has a surprising answer. Is now a good time to buy a house?
It's a great time to buy. That's the one thing I say. You know, the banks are very disappointing because they got a lot of subsidy from this country. They got a whole big handout, and then they don't lend money. They don't lend money. But I tell people, I give speeches on success. I get a lot of people wanting to do it, and they give money to charity by doing it, and it's nice, and everybody's happy. But I tell people this is a great time to buy a house, but only if it's owned by a bank. Because the banks, if you go in with a third-party house, meaning you're buying it from somebody, you're buying it from Mr. Smith, and you go to a bank for a loan, they won't give it to you. They won't give you loans. But if a bank already owns the house, they're dying to get rid of it, and they'll give you all the loan you want because they have to get rid of those houses because the security guards go in and steal all the product. You know, they steal the refrigerator.
Right.
They hire a security guard because everyone steals, right? So they hire a security guard to stop the stealing. But then the security guards go in and steal. No, not in all cases, but in many cases. So you walk into the house and there's no...
He loses the plot there a bit, but but his point is an important one, that it is a great time to get into the market. But look, he's true. And all these properties that we talk about, they're all what we call foreclosed properties, meaning bank owned. They've owned the property and had to take the property back. And look, if they're sitting vacant for a period of time, there's a high chance they're going to be broken into. And it's what he's talking about. And where the value is in the American market is buying a property that's been foreclosed. It's not one that's on the open market because the value is not going to be there. All the areas that we're involved in, there's 10 actual areas that we're involved in. All those areas we have the same business model. We only work with companies who buy the properties in bulk from what we call asset managers or banks over there. Then they have their own construction or renovation team in-house, and then they manage it in-house as well, the property management. And we found that's the most successful model that we've found to make sure you're making money and make sure your questions are answered and things are followed through. And that's the model that we provide anyway in that terms of what we do. What we're going to do now is break to get some quick food to keep us going. But actually, it's just in the next room. So if we go over there, get some quick food, then we'll come back and keep going. Thank you very much.